Welcome back. Well, let's talk about one of the top nifty losers today, which is Sun Pharma. The company's Q1 performance was mixed as revenue was just shy of estimates, but margins improved. To discuss the quarter gone by, I did catch up with the company's CFO, Jayashree Satagopan, and began by asking her about the topic which is on everybody's mind, the impact of the letters written by President Trump to pharma companies to provide most favored pricing for American consumers. Listen in.
As of now, we have not received any letters, and as and when there is a further development, we will be in a position to assess it for our specialty portfolio.
Okay, so just to clarify on this, your specialty portfolio does consist of only branded drugs.
Yes, you're right.
Which are patented, and then once they go off patent, you will see generics come in. Is that correct?
Absolutely.
Okay. So what is the price difference of these specialty drugs that you sell, Winlevi, Illumia, Sequoia, etc., in the US as well as other regulated markets? What's the price difference?
The price difference between US and the other market varies. And at this point in time, these products are mainly in the developed markets.
Correct. But if in case Big Pharma is eventually forced to regulate their prices, say for their branded drugs, would Sun Pharma feel the pressure and have to follow suit?
Yeah, as and when we get the letters from the US administration, this could have an impact on some of our specialty products.
Okay, all right. As of now, you've not got a letter. If you don't get a letter, but you see your peers reducing their prices, would you be compelled to?
Yeah, we'll have to wait and see how this pans out.
Okay, all right. What would the impact be on generic drugs? Because does it shrink the size of the addressable market for generic drugs?
MFN does not have an impact on the generic drugs, as I understand.
Okay, all right. What is your sense in terms of the tariffs on pharma? As of now, we are on the exempt list, but what is your expectation? Do you expect any kind of tariffs, if in case they are imposed, say on the final product or on the supply chain, they would eventually be passed on?
See, at this point in time, the investigations under 232 is going on. Post that, we will get to know what is the thinking around the tariffs for the pharma sector. So we'll have to wait and watch on this front. And as far as the generics are concerned, we also need to consider the supply chain, the economic considerations of manufacturing in India versus US. All of these will be looked into on a case-to-case basis as and when.
But you're not looking to expand your operations or manufacturing operations in the US?
We do have 3 facilities in the US, and at this point in time, we are not considering expanding the facilities further.
I just wanted to come back to the generic market in the US because, the dynamics seem to be changing. There's price pressure. Key drugs such as Revlimid generic are now going to face competition. And the size of the addressable market of generic drugs is probably going to shrink if in case branded drugs eventually have to reduce their prices as well. Do you think it's becoming a tougher environment for generic drugs in the US?
See, the market per se is pretty large. And as far as the generics is concerned, we have been seeing challenges in terms of price erosion, and that's nothing new at this point in time. And therefore, we do believe that despite the MFN and the price pressures that could be on the specialty segment, the generics will continue to play a much larger role in the US market.
Well, let's get to the numbers now, because one of the things that's probably deterred the street is your tax rate, which has risen to around 25%. Just take us through that.
Yeah. See, over the past few quarters, we have been guiding the street in terms of our tax rates moving up. As a company, we did have the benefits of integration and MAT benefits, plus our plants in Sikkim and Guwahati also had the tax exemptions. With the sunset clauses, we will be getting back to the normalized tax rates, which is around 25%, and this is nothing new. I think we have been open about it. We have spoken to the street, we have spoken to the media, and it's a normal course of business. But Ekta, what I would really like to highlight here is the overall business performance of the company. As you could see, that the top line growth has been at around 10.1%, and the EBITDA growth has also been at a higher 19% or so.
Correct.
EBITDA margin has also expanded during the quarter. The tax is a function of some of the exemptions that were available earlier, and it will go through a sunset clause. And for the whole year, we do estimate that the tax rates would be in the range of 25%.
All right. Your guidance is still mid to high single-digit growth, correct?
Yeah.
Okay. What is that predicated on, and does it factor in the uncertainty from tariffs?
Yes, it does factor in the uncertainties from tariff to a certain extent.
Okay. You've also mentioned a $100 million investment on commercialization of 2 specialty products. Will you be deploying the entire $100 million?
At this point in time, we do believe that the investment of $100 million would happen during the year. These are for 2 products, which is Lexilvi and Unloxit. Lexilvi has been recently launched in the US. It's about a couple of weeks back, and Unloxit is planned for a launch in the second half of the year.
Okay. What is the impact of margins given that you will be spending this $100 million additional, and you will also possibly have a higher R&D spend, something that the company had guided towards in the previous quarter?
What we look at with these investments of about $100 million is the long-term impact that it could have for the company's business and its margin profile. We do not specifically look at a very short term or a quarter to quarter in this front, because these specialty products is going to have a longer life period, and initial investments would be required to help them, to help us unlock the potential of these products.
Specialty sales, what is the run rate that we could expect? You touched around $311 million this quarter. Is this the base rate that we can expect in the coming quarters?
Look, the specialty sales will be growing, and we believe that the sales growth will definitely be higher than the overall guidance that we have given for the company.
Okay. 3 of your sites have warning letters now. What is the plan on remediation?
So the sites are working on the remediation plan, including the actions that have been committed to the regulatory authorities. And we expect that we would get into a compliant state on this front.
What about the 8 observations?
As far as Halol is concerned, we did have the FDA inspection that happened during the last quarter, and the site has filed detailed response to the regulatory authorities. We will be awaiting for their feedback further.
All right. We understand that you're planning to launch semaglutide in India. What is the opportunity that you expect, considering that there will be multiple players that will be launching the drug in the country, plus the fact that there are growing concerns with regards to the side effects? There are newer drugs coming in. Novo Nordisk, in fact, slashed its guidance based on slower sales.
Look, semaglutide is a product where we think there is a very large opportunity in the country. At the same time, it is going to be a competitive landscape. This product will have room for many players, and it is also a pretty safe product. As far as Sun is concerned, we intend to launch this product on day 1, and as you know, we are the leaders in the cardiometabolic segment, and we plan to leverage our presence in this segment and launch the product on the day 1.
Okay. Okay, that's the management of Sun Pharma. Interesting insights coming in there. But on that note, we're going to slip into a very short break. Remember, viewers, you can tune into the all-new CNBC TV 18 Prime, bringing you insights from policymakers, business leaders, and economists shaping both the world and India's future. CNBC TV 18 Prime decodes the global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV 18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and Global Lens at 8:30 p.m.